Hi students, now let us see the balance sheet based on liquidity basis. Under the liquidity basis, the assets are written on the right hand side as usual and liabilities on the left hand side. Here the current assets are written first and finally we come to the fixed assets and intangible asset. For example, cash in hand, cash in bank, bills receivable, debtors, short-term investments, stock, plant, machinery, land and building, everything will be there in this order. And finally, the intangible assets such as goodwill, patent, copyrights will be written this side. And in the liability side, as usual, we have discussed the current liabilities. Current liabilities will be written on the top, such as bills payable, creditors, outstanding expenses, loan, bank overdraft, and capital. Okay, this is the balance sheet as at 31st March. Like that, it will be written as at 31st March. 31st March 2020, like this. This format is called liquidity basis. Now, when we get a trial balance got in addition to the balances written on credit side and debit side, and the extra information like closing stock will be written at the bottom of the trial balance. This extra item will be treated as an adjustment because it will not be taken to the trial balance. How to adjust this? There are certain items which we have to adjust. After giving some adjusting entries and transfer entries, we have to take these items into the accounts, into the profit and either trading account or profit and loss account in one way, and definitely it should be taken to the either in the balance sheet, either in asset side or liability side. Now let us discuss about some 5 important adjustments which we come across while preparing the balance sheet. First one is called closing stock. Generally, every time we have that item, a closing stock. And second one, outstanding expenses. Here we are discussing outstanding expenses. Outstanding expenses. Third one, prepaid expenses. Here we have discussed prepaid expenses, and closing stock here we have discussed. Outstanding expenses we have discussed here. And in addition to that, there are some income which we have received in advance. Income received in advance. Received in advance. Income received in advance. Accrued income. See, now these two items have not come here, whereas this prepaid expenses we have discussed here, like insurance prepaid, rent prepaid, like that, and outstanding expenses, salaries outstanding, rent outstanding, and the closing stock also we have discussed here. When these items appear in the trial balance, we did not prepare any adjusting entry, we did not prepare transfer entry. Just like that, whether these items are in credit side, credit balance, will take to the liability side. If these items will take on the asset side, we'll take it to the, debit balance will take it to the asset side. And depends upon whether these incomes or these expenses are accrued or received in advance. Like that we have to decide. Now let us see on what basis we can assume whether a particular item is an asset or liability. If asset means definitely DR balance. Liability means CR balance. Now let us see. Closing stock. Already we have discussed stock. When there is a remaining stock, the remaining stock may be in the form of raw materials. Remaining stock may be in the form of semi-finished goods or unsold goods. Closing stock includes remaining raw materials, semi-finished goods and unsold goods. This everything together we can call it as a closing stock. Now the closing stock we have seen in the trading account, it is treated, it is taken to the credit side of trading account. Finally it is taken to the balance sheet asset side. That about closing stock adjustment already we have discussed in profit and loss account, and we have treated it. And now let us the outstanding expenses. Outstanding expenses nothing but someone example staff employees, they are given service to the business but they have not taken their income. That means it's a liability of the business organization to pay them in near future. So it's a liability. So now this is asset we have discussed, and outstanding expense is a liability. And then the prepaid expenses. Our money is with outsiders. Before getting the service from outsiders, the business has given money in advance. The future liability is paid in advance. Example, the insurance and prepaid tax, insurance, prepaid rent, etc. come under the prepaid expenses. These are the liabilities. Prepaid tax paying is a liability, insurance paying is a liability, rent paying is a liability. When they pay in advance, that means these prepaid expenses are called as assets, assumed as assets, because business money is the outsider. When business money with outside, it's asset. Whereas outsiders money is business is called liability. The liability of the business to pay in near future. And then income received in advance. This is the liability of the business. Why? How it has become liability? Because before rendering the service, before rendering service by the business has received money from them. That means income received in advance. That means the liability of the business to give their service in near future. Without rendering the service, the income is collected from the outsiders. It's a liability of the business. In near future, they have to pay the money. They have to give their service. Then accrued income. That means this is an asset. How it is an asset? Accrued income means business has rendered the service, but they have not received their money from the parties, from the customers. Customers has taken the service of the business, but they have not paid the money. So it's accrued income means the income should be received in near future. So it's an asset. So from this 5 adjustments, closing stock, about the closing stock we have discussed in the profit and loss account itself. When it comes in outside of the trial balance, any balance comes outside of the trial balance, it should be given an adjusting entry and a transfer entry. That also previous video we have discussed. And outstanding expenses, what will be the adjusting entry, what will be the transfer entry. All these things we will see in the next video. Okay, see you.